Hello and welcome. You're watching Last Tick here on News 9 Live. I'm Krishna Kumar and I'm being joined in the studios by my colleague and friend Suyash Maheshwari. And we begin this edition of Last Tick with a check of how Sensex and Nifty closed for the day. Both the major indices of Indian stock markets snapping their winning streak and closing flat for the day, didn't they? Suyash.
Yes, Krishna. So after 3 days in which we saw relentless buying by bulls, where Nifty surged almost 400 points, the market finally decided to take a breather today and ended on a flattish note, albeit with a negative sort of bias. Now for the day, Nifty 50 traded in a broad range of about 90 points, but the real action, Krishna, took between the 19,350 mark, which was a major intraday support for the index, and incidentally coincided with the 20-day exponential moving average and 19,400 levels, the resistance zones, which also coincided with the 20 daily moving average. After the index, broke past that 19,400 mark in the last half an hour of trading, the stock briefly moved into the green, but failed to settle there as it, closed just about 17-18 points shy of its day's high, but above the 19,400 mark. Now Sensex on the other hand opened at 65,000, slipped below it and continued to trade below it for the majority of the session. I think it also settled, it did settle below it around 58 points shy of the 65,000 mark. Now as you can see, the broader markets, as we have been talking time and again, they have been rather resilient in the face of downturn, both in the face of volatility, both on the downside and on the upside. Nifty mid cap 100 today moved past that 40,000 mark and settled about 50 points higher than the 40,000 level. Nifty small cap 100 on the other hand touched a lifetime high for the second straight session in the day. It touched a lifetime high of about 13,250 sort of levels and settled about 8 points shy of the mark. All in all, it was a bullish day for the markets. We did snap the winning streak, but we ended on a flattish note. The setup looks good.
Great. Setup looks good. One thing that has not snapped its winning streak is the Nifty small cap. In fact, any small cap index and mid cap index, nothing seems to be abating over there.
Clearly, Krishna, and I mean it's an anomaly because every time historically, what market tells us at a time of heightened volatility, move away from the broader markets, because that's where and especially in a time when we have seen small caps and mid caps some of them turn out to be multi-baggers. The kind of run-up that they have seen since April of this year, they have not seen any major sort of correction. I think it was just 2 days in the past 3 or 4 months where they corrected by about 3 to 4%. But apart from that, they have been rather resilient. And as you can see, between the three, large cap, small cap and the mid cap, it was the small cap index that touched a new lifetime high in this run-up.
Absolutely, and we have Mr. Avinash Goraksaka, Director Research, Profit Mart Securities, now joining us live on Last Tick. Avinash, great to have you on the show. Flat day for the markets, but no let up in the momentum as far as the small cap and mid cap stocks are concerned.
Yeah, exactly. I think today market were down on a index level, but if you see the broader mid cap index as well as the broader market, I think there has been a lot of good activity and some accumulation in some quality mid caps. In fact, we believe that this is one space where the alpha generation potential is quite significant, and there are many large PMS as well as large ultra HNI investors who actually are obviously buying at even these odd levels wherever the story is strong, where the business commentary is good. So I would believe that this is a stock specific market. So despite the fact that the index was down, there have been some good mid caps which have been in action, and I think that is going to be the theme going forward. Broader index may remain in a range. We saw a good amount of buying in the last few days, but I think today was a slightly profit booking day. So we saw some profit booking. Of course, we'll have to see the day end FI data flows, because that is also one area where the market is little concerned. We have been seeing consistently negative outflows on the FI front, but nevertheless, I think on the index side, it could be a range bound market now, at least going forward.
Now, talking about FIIs, I mean the setup overall, Avinash, looks positive. The three big Qs, the oil prices, they have corrected, fallen below the Israel-Hamas war when it started. I think it was around 83, 84. We are back to those levels. Dollar index is at a 2-month low. The 10-year bonds yields have corrected by about 40 basis points or so from 5% sort of levels. the global markets are also resilient. So in that backdrop, do you expect FIIs to finally return to the market and push it higher to perhaps a new all-time high by the year's end?
Yeah, I think my guess is that FIIs are now going to evaluate investing in the Indian markets very selectively, considering the fact that now there are 5 state elections lined up in November. Any kind of negative surprise year could definitely mean a little bit of selling pressure, at least in the very short term. And of course, next year we have general elections. So I think there would be definitely some selective buying by FIIs in selective stocks. But the broad trend would become positive only when bond yields, come down further. Even as of now, the bond yield is quite, steeply kind of placed. So even at these levels, I would believe the FIIs would wait and watch because, the dollar is appreciating, the rupee is weakening. So fresh dollar inflow may take some time, maybe a couple of months. And then, if the rupee, hardens or appreciates, that would be a good entry point for the FIIs because they obviously look at the currency factor, before they invest in any emerging market like India.
Avinash, interesting that you mentioned the state elections. I mean, do you think that we can see some impact of it on the markets? I mean, if there are any surprises, and by surprise, I mean that BJP is seen losing some ground, will the market take cues from the state elections and extrapolate for the Lok Sabha elections?
No, I don't think, the loss in state elections, even if it does happen, would be extrapolated to the general elections. See, I think on a very broader basis for the general elections, I think it is very clear. Almost, the entire market is looking at a, BJP, victory again. But I think, 2 key states which are very important, Suyash, is that we are looking at elections in Madhya Pradesh and Rajasthan. In MP, the BJP is already, running the government for almost 3 successive terms. So I think there are now clear doubts whether this consistency will be maintained. So, any loss here would definitely be considered as a short-term negative surprise, and the markets would obviously correct accordingly. But I don't think that is going to be carried forward for the general elections. But yes, the sentiment would definitely be a little cautious, considering that, almost everybody in the market is expecting a full landslide victory in all the 5 states for BJP. So any negative surprise here would definitely, be a little bit of a pain in the near term.
Now, Avinash, among sectors, one that stood out for me was Nifty Bank. I mean, yesterday it turned positive for 2023. I think in 2023, so far it has given returns of about 1%. Overall, has been an underperformer, underperformed most of the sectoral indices. And I mean, the results overall have been good, right? So, do you expect the Nifty banking pack to finally, move out of that bearishness that we have seen playing out in the last few months?
Yeah, I think the second half, historically has always been a very good period for the banking sector in terms of credit growth, credit disbursements. So I expect a much stronger second half as compared to the second half of last year. And I think the first half numbers have also been quite decent. If you look at private sector banks like ICICI Bank, Axis Bank, or IndusInd Bank, very strong numbers, very good asset quality numbers. Credit growth has been in double digits. So, most of these banks are confident of growing in double digits as far as their balance sheets are concerned. And on the PSU side, I think, banks like Canara Bank, Bank of Baroda, which are large banks, have also reported decent numbers. Of course, SBI numbers were slightly below expectations, some crack in their, net interest margins. But I think if you look at the asset quality and the loan disbursements and the kind of management commentary, my sense is that, these are definitely reasonably good, bets with reasonably good risk reward at current odd levels. I think you need to give in some more time. Banking will definitely perform once the entire corporate sector takes off, because even as of now, retail demand, corporate capex is going as per schedule. Government is also spending in a big way. So I would believe that, banking is definitely one sector which is available at a fairly good valuation, which I think investors should capitalize. I think it may take a little more time, but definitely the outperformance in Bank Nifty would come in once all these banking stocks, which are large index, movers in the banking Nifty, would definitely play out.
All right, I want to shift focus from the banking sector to the realty sector. The realty index, is at a 15-year high technically. I know those numbers for the day said it's down by 1.5%, the realty index. But the fact of the matter is that the realty index is at a 15-year high, and it seems to have witnessed some profit booking in today's trading session, didn't it, Avinash?
Yeah, I think, some amount of profit booking is definitely, was reflected today. But one thing is very clear, that this sector is now going strength from strength. If you see the second quarter numbers, the inventory levels which are sold, the pre-sale numbers which have been sold, by some of the larger companies, like DLF, or for that reason, Oberoi Realty, Soba Developers, or typically, smaller players like Anantraj, which operates in northern India in the Gurgaon market. One thing is very clear that all these companies have been able to sell their inventories comfortably, and there is genuine demand which is coming in. So I think normally the second half is considered to be a much stronger period. Festive season, normally such kind of companies announce several new projects, and many large pipeline is pretty good. So I think all in all, it should be a buy on decline for this sector.
Okay. Buy on decline as far as realty stocks are concerned is the word coming in from Avinash Goraksaka. Avinash, stay with us. We have a big focus on this edition of Last Tick, and that is again on the IPO market here in India. Bear in mind, India's IPO market has been on a bull run on its own. It's been boom time. Literally every single IPO is listing at a 30%, 40%, 50% premiums. In fact, Suyash here tells me that now the market normal is that it has to be a 50% premium for it to even make the headlines. That's the kind of premiums which IPOs are being listed. But one IPO, Suyash, is in news. It's buzzing on our social media feeds. It's buzzing everywhere with news, interviews, and etc. etc. And that is the Mamaearth IPO, because that has been listed. Mamaearth has been listed, the cosmetics company. But Mamaearth's premium on listing is just about, what, 2 to 3%, Suyash? And yet, at a time when IPOs are listing at 50% premiums on average, Mamaearth, despite a 2 to 3% premium of a listing, is creating news like never before. Can you just decode what Mamaearth is all about and why is it making all these waves?
Certainly. I mean, there is a good reason for why Mamaearth's listing moved away for the new norm that we have been talking about, the 30 to 50% listing premium.
Yeah, well, first we'll talk about why is that the premium on listing for Mamaearth is so low.
Yes, let's look at how the stock did today. So it listed at a premium of about 2% odd. However, it faced initial sluggishness, but after it was able to move ahead after I think in a couple of hours or so, it went on to touch an intraday high of about 340 rupees or so, which is about 5% higher from its IPO price. It finally settled at around 337, which is about 4% up for the day. Now I'll talk to you, I'll talk why the stock and the listing overall was very muted. Let's first start with the financials of the company. Now, in the last 3 fiscals, Krishna, as you can see on your screen also,
that's the name of the company. If people who are confused, Mamaearth is the name of the brand of cosmetics they sell. It's the name of the websites, what you look for everywhere. But Honasa Financial, incidentally, is the official name of the company. Please go ahead, Suyash.
So Honasa Consumer has been moving in and out of profitability for the last 3 years or so. In FY21, it had a loss of about 1330 crores, as you can see. In FY22, it moved into profitability, posted a profit of about 15-16 crores. Again slipped into into losses by FY23, posting a loss of about 143 crores. So the the company has been slipping in and out of profitability. So there is clear trend that it's moving out of losses into profitability.
Okay.
Let's look at the margins also. Now the gross margins, which basically tells us how efficiently the company is managing its direct production cost, sits at about 65% to 70%. Now that's great, right?
Right.
However, the EBITDA margins, which also accounts for your selling and administrative expenses, other operating expenses, and is a proxy for your operating profitability, sits at a mere 1 to 1.5%. Now, compared to the industry average EBITDA margin for the entire industry, for the likes of your HUL, Marico, Emami,
FMCG industry,
FMCG and personal care at that,
yes,
is around 20 to 23%. So there's a significant decline over there.
All
and
right.
The biggest overhang for Mamaearth, Krishna, has been the ad spends. Now, the company has been spending aggressively on ads, and it's not necessarily bad. Of course, it's a startup. It will, try to promote, put its name out there. But the problem is the ROAS, the return on ad spend, which currently sits at around 2.6%. What does this tell us? This basically tells us that with these aggressive spends, they are able to bring on board the new customers, but they are not able to retain them. So there is no repeat customer base that's building up for Mamaearth. Now that is a big problem. Now let's also look at the peer comparison overall. As you can see on your screen, Mamaearth, compared to all its peers, has a negative EPS growth. It has an EPS growth of about 4.66%. Return on net worth is significantly below the industry and average, and it's in the negative. It's at about 23% or so, whereas you can see for other players 20 to 60%. So clearly, as far as financials are concerned, it needs some time.
All right, that's one way of putting it. Financials are concerned, for us to understand any clear pattern of what's happening over there, because you can't go from 100 plus crore losses to about 15 odd crore profits and then back to 100 plus crore losses, nearly 150 crore of losses. We have to understand those numbers and we have to see how those numbers go forward. But bear in mind, Mamaearth does have a lot of advertising going for it in terms of star investors. You had Sushmita Sen, who invested 2 to 3 crore rupees inside Mamaearth. Bear in mind, it is the only comparison point, Suyash, I can think of is when you talk about Mamaearth's IPO and listing, you have to talk about the Nykaa IPO and listing as well. Another personal care brand which had great buzz, but the moment it listed in the stock markets, all that buzz went away. Avinash, one question and only one question on Mamaearth. The numbers are not making sense. Is this another Nykaa?
I think only time will tell this whether it is another Nykaa. But as Suyash really pointed out, the bigger concern is that the company has not been able to retain its customers. It's been able to get new customers, and that is definitely a big negative. Valuations have also been very costly. In fact, at the current valuations which was offered to the Indian public and to the institutional investors, I think there is no way this price could be justified. I would believe that the bigger issue was that out of 1600 or 1700 odd of public issue money, almost 1300 crores went to the promoters via an OFS. So that was also a big negative, because that clearly meant that the promoters wanted to encash the opportunity. And obviously this company does not manufacture anything, so they don't have any hardcore manufacturing asset. Everything is outsourced. So to that extent, I think markets would obviously like to see 1 or 2 quarters of performance, strong commentary, and of course the data points which actually matter to the performance of the company. If the management is not able to deliver on top line growth, profitability in the next couple of quarters, I think definitely the markets would be little wary of re-rating the stock going forward. So that's one of the major reasons why the stock got listed almost at its IPO price, and that is probably going to play a big role at least for the next 1 or 2 quarters before the numbers keep coming out.
Now, Krishna, since Avinash brought up the valuations, let's go back in time. In December 2022, the first time the company filed its draft red herring prospectus, it commanded a valuation of about 24,000 crore rupees, right? Less than a year later, it comes out with an IPO at a valuation of about 10,000 crore rupees. Wow. So you have basically cut the valuation by about 60% in over a year. I mean, what happened over there? Was there a major trigger which created that negative sentiment? And as a result, we saw such a big cut in internal valuations. Second of all, I mean, I'm not sure even how do I trust that 10,000 crore valuation. To me, all of it seems like paper talk.
Well, all of it seems like paper talk is what Suyash says, but bear in mind, celebrity investors, it's a new age company, Suyash, difficult to, compare to all those old age companies we're talking about, Hindustan Unilever, Marico, new age company that goes with the D2C or direct to consumer technique of both marketing and selling. So that's Mamaearth's new age business model. So let's hope that we'll be able to understand that business model better, and more importantly, the numbers speak for themselves as far as Mamaearth is concerned, because at the end of the day, as far as markets are concerned, that's all they care about. The numbers have to speak for themselves. Their quarterly earnings numbers have to speak for themselves. And with that, I'm afraid we've completely run out of time here on this edition of Last Tick. I'm going to thank Mr. Avinash Gorakhsakar, Director of Research at Profit Mart Securities, for taking time out to be with us here on this edition of Last Tick. And of course, thank you, Sash, for being with us here on this edition of Last Tick. It's a wrap here from my side for Last Tick. But don't go anywhere. We will be back with Business Plus in just a couple of minutes. Keep it with News 9 Live.